Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today we are going to cover 5 stocks that I think are extremely undervalued for May 2023. Before we do, I'm going to give you the methodology as always as I go through these lists. So what I am looking for are strong, stable companies that have momentum and that are undervalued. What do I mean by momentum and undervalued? Momentum as in they are outperforming the S&P 500 over the last 6 months and over the last 12 months. Why do I look for that? That is because there's a UCLA study and many other studies that confirm that when stocks have momentum, when they're outperforming the stock market for a specific length of time, the likelihood of them doing that the next length of time, so last 6 months, the next 6 months, is higher than just throwing a dart at the board. So that is the first thing that we're looking at. The second thing, we're using what is called discounted cash flows. I have done an entire, really 3-part series inside of our members only to show you exactly what the process is, what information you need to know, and then how to really price out what the value of a company is, and then what price you should get it at, if it's overvalued or undervalued. So if you want more details on that, make sure you go out and check the members only. So it's according to my math of what I am looking for. In this video, I'm going to give you the name of the stock, obviously, the momentum, and then what I think it should be valued at and what it is valued at today. You can make the decision whether or not you want to invest. I'll go through each of these and then tell you why I like each and every one of them. All right, the way we did this, other than giving you the criteria in the beginning, is I started out with 39 stocks. I started out with 39 and whittled it down to these 5. Now, inside our members only, I've got some extra bonuses I'm going to add on to this list. So again, another incentive for you to go ahead and sign up. That video will drop on Friday. All right, so we started with 39. I narrowed it down for these specific reasons. First one is Ulta. I have talked about Ulta for maybe 2 years now in terms of being a stock that has consistently grown, but also falls into a little bit of a defensive category for whatever reason. The beauty category does well in the event of a recession. And we've been talking about the potential of a recession for a while, and this stock has just continued to go up anyway. Ulta's up 21% in the last 6 months and 32% over last year, which is amazing. However, I value the company at about $723 a share. Right now, it is about $504. That to me screams undervalued. Okay, if I think it is valued at $700 and it's trading around $500, it should have room to continue to grow. And again, last year it was already up 32%, or since last year it's up 32%. Can't sit here and tell you with a straight face that it's going to grow another 30% or that it's going to go 30% a year. That would be unrealistic and irresponsible of me to say that. However, the past is the past. It doesn't predict the future, but it has had strong growth within the last, I would say, definitely over the last 3 years, but perhaps like 5 or 6 years, the company has done well, and I think it can continue to grow, especially over the next 6 months to a year. I also am not promising you it's going to go from 500 to 700 either, okay? I think it is valued at that. Whether it gets there or not, it's totally up to the stock market. All right, the next one here is Merck. I've also talked about Merck for plenty of reasons for the last maybe 8 or 9 months or so. It's up 15% in the last 6 months, up about 34% over the last year. I'm valuing this company at $177. Right now, it's about $117. So this is not, quote unquote, as undervalued as Merck, or I'm sorry, undervalued as much as Ulta and some of the others on the list, but something in the medical field and the healthcare field tends to be very, very solid. Merck has been a very, I wouldn't call it slow because it's up 34% in the last year, but a company that is consistent, just raking in cash, continuously putting out new drugs, new medicines, and continue with the old stuff that they had been doing. And it's difficult to find stocks that are just really consistent. Right now, you can find stuff that's, you know, blowing up left and right, like Meta now, like Tesla was earlier this year. But sometimes you need something that's a little bit in the middle, something that you can relatively rely on when it comes to the stock market. I think Merck is one of those. That stock symbol is MRK. The next one here on the list, and I cannot believe I'm saying this, is Salesforce. Stock symbol CRM. I have had some I feel like every year I do a video about Salesforce is either very good or very bad. This time it's good. And that's because Salesforce is up 44%. 44% in the last 6 months and up about 25% over the last year. We all sat here and talked about Salesforce a year ago, and then a year before that, I know I talked about it a bunch in 2020, and it wasn't doing good. every single time we talked about it. And now that I stopped talking about it, all of a sudden Salesforce takes off. Now, I don't know what's going to happen next. I currently got own Salesforce. I do own Ulta. I do own Merck. But it's hard to ignore. Now, I am valuing Salesforce at about $326 a share. Right now, it's about $204. So it still has room to grow in my estimation, the way I'm looking at it. So if you want to hop on Salesforce, this could be your chance. The other good thing that I think is helping Salesforce, well, two things. One, they've had layoffs. That is not, something I'm proud of. I don't want to invest in something just because they had layoffs, but that does help their free cash flow. That does help the company appear to be more financially stable, because you cut your biggest expense, and if you keep things the same, you're going to be fine. The other thing too is a lot of tech stocks have done quite well so far this year. Salesforce happens to be one of those tech companies. So it could be just an easy, let me just throw a dart at a tech company, and this one happens to be undervalued in my estimation. So it could be a very easy, let me grab this, ride it out until 2023 or 2024, or at least through the end of the year. So that's one that you definitely want to at least raise an eyebrow at. The next one here, and this one's kind of in the middle. I wouldn't call it in the Merck category per se, maybe a step beyond that or a step behind that in terms of like defensive and safety. The stock I used to own, I don't currently own now, and that is T-Mobile. T-Mobile is down 4% in the last 6 months, but it's up 16% over the last year. So this one is very, very moderate, a lot more conservative, and you could say that this is one, perhaps outside of Merck, maybe the only one that has to happen. Somebody needs a carrier, and you only got 3 choices. Okay, you got T-Mobile, AT&T, and Verizon, and that's really all you got. Yeah, it's Cricket and some of those others out there, but come on, really, you got 3 national major brands, and somebody has to have T-Mobile, right? They've also, as you know, they bought Sprint several years back. That is starting to roll through and really help out the company over the last year or so. I am valuing them at $387 right now. It's about $142. When I owned T-Mobile, I got in because there was a lot of insider buying activity. I did not see that this time around, so I got my money. I got my 14-15%, whatever that gain was, and I hopped out. I'm not opposed to getting back into it, but at this point, I see it as undervalued. All right? And then the last one we're going to talk about is, I can't believe I'm saying this either, because this is one we've talked about a few times. I don't know how many people was listening to me, because Hershey is still on fire. Okay, it is still on fire, and that's because it's up 18% in the last 6 months and up 22% over the last year. I am valuing Hershey right now at $508 a share, and today, the time we're doing this, it's trading at $275, around $275 a share. That to me is undervalued. Now, if you've been subscribing to the channel and liking the Instagram videos and all that stuff, you know for a fact I've been telling y'all about Hershey for a long time now, even back when we were talking about best inflation stocks. Go back and you will see me talk about Hershey, and one of the reasons I liked it so much is because they're one of the easiest companies to increase prices without me and you feeling it. If you're selling a chocolate bar for $1 and I increase my prices by 10%, you're paying $1.10. You're not going to notice that as much. But for Hershey to say, hey, I increased my revenue by 10%, that is incredible for them, because that little dime starts to add up, because they're selling millions and millions of chocolate bars every single day. On the other side of this too, and I've covered this again more than a year ago, they weren't in the huge supply chain fiasco. Remember we had talked about supply chain and how that was something? Feels like so long ago now, right? When we were talking about how supply chains were messing up everything, and that was the reason why inflation was high and stock market was terrible. Well, Hershey, the majority of their operations was here in the US. They didn't have to deal with a lot of the stuff that we had to ship to and fro from China or Europe or anywhere else. They are still doing quite well right now. So hopefully somebody listened to me, because when we talked about it, Hershey was well under $200 a share, and now it's around 274, 275, and I think it is worth at least 508 to be exact. So I think it still has quite a bit of room to grow. Definitely a stock that should be considered for one of your long-term holdings. All right, now I got a bonus one, but this bonus one is for our members only. And that's because not only is this stock, I'm looking at my notes now, undervalued by about $246 to be exact. So it's quite undervalued, has some room to grow. It's up 69% in the last 6 months and up 120% over the last year. Now, I went back and had to double check those numbers because I did not believe it. And this company is inside the S&P 500, so it's not some small penny stock. It's a company that you have to deal with whether you like it or not, okay? And it is in the financial space. So that's all I'm gonna say. That's all I'm gonna say. You'll have to wait till Friday to figure out what stock this is. And if you're in the members only, you already own it, right? You are where you are supposed to be. I'm going to add some additional stocks to the list. But to get the rest of the list, you need to make sure you're in our members only. That link is right here and it's also in the description below. And I'll run through the top 5 again. We've got Ulta, ULTA, Merck, MRK, CRM is Salesforce, TMUS is T-Mobile, and then Hershey is HSY. If I were to classify these, I would say that Ulta, Merck, and Hershey are, I would say, the most quote-unquote reliable, as reliable as you can get in the stock market, a little bit more defensive. If I'm somebody who's a bit more conservative and I don't want to take a whole bunch of risk, that is where I would go for decent to moderate gains, likely to beat the S&P 500 in my view. If I'm looking to make the most money, then I'm definitely going with Salesforce CRM. And then T-Mobile, that's a bit of a question mark. It is on the quote-unquote safer side, but it is the only stock on the entire list that has had a negative return in the last 6 months. That does not mean that it will have a negative return in the next 6 months. But if I had to pick, right, if I had to put money on it, which I have 2 of these already, then I would not invest in T-Mobile of this list. Okay, so it all depends on what you're looking at and what you expect to happen in the future. So those are the top 5. Again, Ulta, Merck, Salesforce, T-Mobile, and Hershey. The most confidence I have is in Hershey if I'm making the most money outside of Salesforce. Salesforce is going to make the most money, but like the most reliable, I think, is Hershey, then Ulta, Merck, and then T-Mobile at the end. All right, that is it for me. I will talk to y'all later. Bye.